All right, very good. All right, so again, I want to say thank you for everyone that's attending this here today. We certainly appreciate you being in here. I recognize lots of familiar names, and there are several names that I don't recognize. So that's good. It's a nice mix of both. So again, if you are a guest in here today, we appreciate you being in here. If you are a regular attendee of the things that we do, we also appreciate you being in here. So I'm going to lay a couple of the ground rules out here for this presentation today. I'm going to go through the material, and then at the end, we're going to go through and answer as many questions, and we'll be here as long as you would like to be here. And I'm going to be prepared to answer questions, as many questions as required. So we've got a few names at the top of the board here that you see. You see Matt, you see Dave, you see Brad, and of course you see my name up there as well. So Matt's going to play a pretty big role in the information that you're going to see here today. But as he and I have talked, I'm going to kind of drive the bus today. But we're going to talk about some of the ideas that Matt has brought to the table here for us, and that was really the genesis to some of the things that you see in here today. If you're not familiar with who Matt is, Matt has been with us now for about 6 weeks. Matt's been in the business for 30 plus years, and Matt's forte is risk control. And he has brought to us some tools, not only from the trading perspective, but also from his risk management perspective that I'm going to present to you here today. We've incorporated them into the things that we do here, and I'm going to, like I said, we're going to present some of this information to you here as well. Hopefully, it won't be too dry. I'm going to hit this thing from the really high points here. If you need me to drill down into some information, we can. But I'm going to try to hit the treetops, give you the 30,000-foot overview of what we're doing here today. Then I'll let you ask me some questions. So again, I know these things can be long. Sometimes they can be tedious when you're going through information. I'm going to try to make it as informative and as light as possible. All right, so obviously, the title here is $9,000 in 9 days, and what we're going to talk about is the trading strategies and methodology used to achieve this particular milestone. This milestone that we did was centered around a Top Step Trader combine. So if you're not familiar with who Top Step Trader is, they are a very well-recognized, now in the business, prop firm, right? And what I mean by prop firm is they basically recruit trading talent. And if you can prove that you can trade, they will give you an account to trade. Now, there's some rules and regulations and some hoops that you have to jump through. But in the end, it is a very well-respected and very well-known entity in the marketplace. So we'll talk a little bit more about them, and we'll talk a little bit about why this is an important thing for us to be discussing today. All right. So our first slide here, right, is the trading mountain, right? We all are looking for, how do we get to the top? Really, that's the question here. How do we get to the top of the trading mountain? We all strive. The mountain, by the way, the top of the mountain looks different for all of us, and we all strive to get there. But some of us fall short. Some of us make it. That is always the question, though, is how do we get to the top of the trading mountain? All right. So by the way, my background is, and you can read about this on the website, there's an About Me page. And Dave, will you throw the About Me page link from the website down there in the box? You can read a little bit about my history. I used to manage a large number of people before I became a trader. And one of the things that I did is we would go through an annual goal process. So if you have a regular day job and you're in the corporate world, you understand about these planning meetings that go on. Well, one of the things that I used to tell people as we went through this process is I would say to them, before you begin the journey to the top of the mountain, you need to visualize what the view is from the top of the mountain. So in other words, what does it look like when you get there? What does the top of the mountain look like when you get there? Well, success will be measured differently for each person, and you need to decide what it looks like for you. Hey, real quick here, Dave, are you still in here? All right. So what you will want to do is you have to decide how it's measured for you. What does that mountain look like for you specifically when you get to the top? For me, the mountaintop looked like this. In my case, the mountain was to successfully complete a Top Step Trader combine in front of our live trading room using the new trading tools and the pyramiding order entry strategy. Now, if you're a regular follower of me and the list and the things that I do, you know that I made a paradigm shift about, I don't know, I do know. It's 1 calendar month from today, August 10th. I made a paradigm shift in the way that I would enter into my orders and my positions. And so what the mountaintop looked like for me, what I set out to do here is I said, look, I'm going to trade this live in front of everybody. I'm going to do it. And those of you that are regular room members can vouch for this, right? I had the little Top Step Trader widget in the top right-hand corner of the screen. And when I lost, it showed up. And when I won, it showed up. And then in the end, when I put out Trade of the Day videos, it matched what you saw on screen, right? I did this live in front of everybody. No smoke, no mirrors, live, honest information in front of our group every single day. I also wanted to do this by starting with trading a 2-lot. So I'm not trying to make $9,000 in 9 days. I wasn't trying to do that at all. But I certainly wasn't trying to pass this combine, if you will, by firing 10 lots at it, right? I wasn't firing 10 lots, which they would allow you to do. I was starting out with the most realistic way that I could approach this, that I thought would be the broadest base for the guys that were in our room, right? That's what I was looking for, is to be able to successfully show the average retail trader. In fact, I was trying to be as transparent as I possibly could be. All right, so let's talk a little bit more about this. So here is the mountaintop. So you are all, no doubt, if you're a regular follower of my stuff, or if you looked at you're here, so you registered on the webinar page. And so you've all seen this screenshot, right? You've seen that we averaged $1,000 a day. Our largest winning day was $2,000. Our largest losing day was $997. Remember, this was all starting with the 2-lot. Okay. So as I'm preparing to write all of this stuff out for you guys today, I've been working on this for, I don't know, a week or two. And this is about where it was going to stop for me, right? This is where I was going to stop, and I was going to move on to the next slide, okay? But I got this email yesterday that I thought I would share with you. Now, you guys know my history. I've passed the first combine, became a funded trader at Top Step Trader in the year 2012, okay? I became that funded trader in the year 2012. And so what they do now, it's a lot different today than it was back then. And so what they do today is they put you through, 99.5% of the people go through this thing called live trader prep or funded trader prep, where they basically want to see you do it again. They've seen something in your numbers that require them to make you go through it again. Okay, not an entire process, a much more realistic, easier to achieve, but a new process nonetheless. All right, so as I said, I was going to stop right here. I was going to show you this. We're going to all go, ooh and ah, that's really cool and that's impressive, right? But here is where this gets to be a bit more impressive. I received this email yesterday. It's an It's an automated response generated by Top Step Trader. So can you guys all see this email? Just want to make sure here. All right. Okay, very good. Okay, so this is from the Top Step Trader funding department. I got this from this is just the auto-generated. I obviously have a relationship with them already, but I got this from the auto-generated area, right? Top Step Trader funding department, Wednesday, the 9th of September. Jason, congratulations on your performance in the Combine. We have started the process of setting up your funded account, and you will be hearing from Mick within 48 hours. Provide him with the requested information, This is an auto-generated email, right? Okay, so what does that say? That says that this performance was so strong, and I'm going to show you what I did to get here, that this performance was so strong, right, that they didn't even need to take me to that next step. They were automatically going to put me in the live funded account based on the results of this particular combine, and I'm going to show you what I did to get there. Okay, so on to the next slide. So back to the question, how do we get to the top of the trading mountain? Well, every good story and every good thing starts with the beginning. Today, the beginning here is you don't begin to climb to the top of the trading mountain or any mountain for that matter without having a plan and the right tools. I think we can all agree with that, right? One of the things that I used to tell my group of supervisors that I used to manage was, if you're going to climb to the top of Mount Everest, well, after you picture yourself there, you have to kind of work backwards and figure out how to get there. Well, if you need to be in really good shape, but you need to be in top physical condition, then when your buddies ask you to go out and have a few cocktails and stay out till the witty bitty hours of the morning, and then let's all go to Denny's and we'll eat some pancakes and sausage, you can't do that if your objective is to be in good shape. And that's the same thing here. You have to have a plan, right? You have to have a plan before you can get started, okay? Rick, I see your questions in here, and just make sure you save those questions to the end, all right? All right, so what is the plan and what are the tools, all right? So the plan, we have a trade plan. We call it the OTG trade plan. It's an indicator that bolts to your chart, and I update this trade plan. We'll talk about this, but I update this trade plan before the session every day, and it's bolted directly to your chart. We have the tools that we use. We use the OTG wave tool I'm going to show you, the OTG SNR. We used volume bars. I'm going to explain what those are. We also used the OTG risk analyzer algorithm, and you're not going to have seen anything like this before. So what I'm going to say to you is you hold on to that thought with the risk analyzer algorithm. If you take nothing away from this session today, that will be a very important thing for you to watch as we go through it here today. And then, of course, we've created what we call the OTG Risk Manager, and I'll show you that as well. All right, next step on the path, and your first step to success, at least as we saw it, is the OTG trade plan. Now, whether or not you use a OTG trade plan or you have your own trade plan or you've picked up something along the way that speaks to you directly, the very first step is to make your plan, right? For us, the OTG trade plan, we publish this plan 12 to 15 hours prior to the next trading day. So about, well, I won't do it today, but around 5:30 Central Time, I will have this plan up and posted for the next trading day, and you'll have all of my thoughts and ideas about what's going to happen into that next day. The plan includes the following. We have some pivot times where we expect the market to make some moves based on an algorithm that we use. We have rules for our planned entries, and we have risk management ideas to include stop loss, profit targets, and our pyramiding approach, or the add points that we use along the way. So this is what a copy of our OTG trade plan looks like, right? This is, again, what's bolted to your deal or bolted to your charts every day. And you pull this up, you hit the button, and it pops open in a PDF form on your computer. So we have some pivot times that we look at. We have our setups and what those entries look like. We give you some rules for that. And then, of course, we give you the entries and the profit targets, etc., revolving around our money management aspect. So, again, this is just a 4-page copy sample of what we do every day, and this is published every day before we head into trading. Now, again, it really doesn't matter whether you're using my trade plan or you're using someone else's trade plan. I highly encourage you to have a plan as you approach the market on a day-to-day basis. All right, so we're going to talk a little bit here about the supply and demand tools. We call them the support resistance and the OTG wave. Now, for those of you that know me and have been around me, you know I'm a price action and I'm a support and resistance trader. So I am looking for areas on the chart where I believe price action will respond, and it will either A, move away from it, or B, rotate around it. What we've added is a tool that Matt brought to us and that he's been using for a number of years called the OTG wave. Now, the OTG wave is going to provide you with some insight into those support and resistance levels or those demand areas. So if you've been around us for a while, you know that sometimes we win the battle but lose the war. And what I mean by that is we'll have a really good, solid idea about where the market's going to get to, but we end up losing the war because we would take stops around that support and resistance area. Well, what we've been able to do here by incorporating this wave into the program, this OTG wave into the program, is we've been able to find areas of resistance and support around our bands that allow us to get some really strong entry points. I'm going to show you. All right. Support and resistance levels, we'll just go through this really quickly. Again, this is very basic stuff, but support and resistance, they represent key junctures where the forces of supply and demand meet. In the financial markets, prices are driven down by excessive supply and driven up by excessive demand. And that is literally the textbook definition from stockcharts.com. Now, the OTG wave indicator, like I mentioned, is going to allow you to look inside the volume, both supply and demand, and find out where the hinge points and the big moves are. And this thing's going to be on any bar chart you like to look at. Matt looks at a 3 range. I like 1 minute. I also use it on a 15 minute. But the bottom line is it's going to provide you with some insight into what's happening around these supply and demand zones, right? So let's take a look. Here's a few examples. So here's a chart from September 3rd, and it's a 1 minute chart. Okay, whoops. Sorry about that. Let me go back a step. All right. So I'm going to focus your attention in on this little area right here, okay? So first of all, the first thing you see here, this green area is a supply and demand zone. It's one of our support and resistance zones. And this red area is also a support and resistance area. In this case, it's resistance. The green level is support. As the market has moved up into our zone, this is our first reference point, right? We are watching now to see what happens. Look at all of the volume that hit up here at this level. There was 7,300 contracts that came up into that level, right? 7,300 contracts that came up into that level, and the market immediately pulled back off of it, right? And formed a low. So we began to watch this low. Market pulls back up. Now, on much less volume here than it was on that first push up. So the sellers took over here, absorbed all of this buying pressure. Sellers took over, pushed the market down underneath your supply and demand zone. Pushes back up on less volume than it came down than the original push up. Sellers meet that resistance area and push it back down. Now, this time they pushed it down on 4,300 contracts. Bottom, couldn't get through the bottom again on 4,300 contracts. So a huge heavy push down. The buyers said, hey, we're going to absorb all of that and we're going to wait and try to push this thing back up. They push it back up on a little bit heavier volume than the previous time, and it gets pushed back down. This time you have a triple bottom down here where every time you've come into this zone, the buyers have stepped back up around this resistance point and said, we're going to try it again. So what I did and what I do is I look for a break of either one of these 2 points. I'm looking for a break above here. I'm looking for a break below here. Watch what happened when you zoom in a little bit closer. 3,000 contracts on the push up into the resistance, but only the selling was exhausted at that point. Only 793 contracts on the pullback. Huge push up into the resistance, 793 light volume on the pullback. That's your sign that this thing is about to get tired. And look what happens, right? It pops through that area, one tick above this high here where you had basically a triple top and a triple bottom, and boom, in about 36 minutes, it took a while, it goes right up to the target for an 86 tick move. And so one of the things that the paradigm shift that we've had here is that we go from, sorry, can everybody hear me okay? Telly is saying he can't hear. Can everybody hear me okay? One more time. Okay, cool. All right, so what happened on the break point here is you broke through here, you came back on no heat. That's how strong this was. And then you had this pushback up right into our zone. So one of the things that we've been able to adjust to, and this tool has allowed us to adjust to that, is we know that the market's going to move in steps. It's going to go from step to step to step. You've heard me say this repeatedly in the room, and if you've watched the trading videos, the way that we step out the market with our support and resistance levels, the market has a tendency to go step to step. In the past, it's right here in this zone where I would be hurt, right? This is where I would get hit back and forth, is right here in this zone. And so what we've done is been able to provide a tool to help us, Matt, thank you, to be able to provide a tool to help us get through that chop zone and then up to our next step. All right, so that's one example. Let's take a look at another example. This example is from August 31st. It's your 1 minute chart, and you had a very similar type idea. So if you take a look here, look at this heavy push up through one of our bands, right? Big big buying pressure pushing up in here, and we immediately get socked back down, right? A lot of absorption going on here. We try to test it again, can't get through this high, and then the sellers step up on one long bar back into our resistance zone. Now support. Push up, push down, push up, push down. Lots of rotation around our supply-demand zone. And we made one push up here on 3,200 contracts. We couldn't get through this high again. We made a very large push down and then could not make a new low through our band, through our zone. And again, you could have been under here. You could have been up here. Obviously, the market was up here. And so you're bracketing this whole range right here. Market gets in, and in 6 minutes, it goes 42 ticks to the next band where it does what? It begins to rotate again, right? And that's what these bands do. Our bands are that strong where they begin to rotate. And so what you've done now is we've given you a tool to be able to figure out how to play in and around those zones. And that's a very important thing. All right, let's take a look at one more example here. This example is going to be from August 28th. And it's the same type of idea. Market comes up into one of our resistance zones. It begins to rotate, does the dance around it. Once you made it up in here, you could never get out of the zone. That was your key to know based on, and look at all this seller absorption, right? This is your key to know that if we break this zone again, where we tried to get through these highs and all these long wicks, that you would be able to break through it here. And if it didn't, you would have a small stop. But there is, in 4 minutes, once you broke through this, it took you right up to your next target, which was 67 ticks. So again, what the takeaway here with this particular tool is that when you have the right support and resistance zones, like we do, and you have a tool now that's going to measure how the volume is responding around your support and resistance zones, it's going to give you a much bigger set. Sorry, let me say this the right way. Your edge, that's going to be your edge, right? We're all looking for the edge. What's your edge? Well, we know where the support and resistance zones are. We're watching the volume to be able to show us how to play around that volume. All right. Yeah, and that's $10 a contract, exactly. All right, so here are your OTG volume bars. And what I call these, Matt introduced us to these as well. What I call these is this is your alternative to reading the tape. Okay, so let me explain what that means here. Let's go to the next. These OTG volume bars were developed for traders who have a difficult time interpreting the vast amount of information in the form of numbers on a price ladder or a time and sales display. We all know what we're talking about, right? We know that if you were to take a look at this, okay, I love this, by the way. This speaks to me. This is perfect for me. I can look at this and this works. But for a lot of guys, this is very difficult for people to comprehend. What do all these numbers mean? And look at all this stuff going back and forth. And I love it, right? For me, it works. Well, Chris, I think we may answer your question here in just a second. So let's take a look at a few examples of what I'm talking about with these OTG volume bars. And they will present to you a real-time visual interpretation of the amount of volume being traded on a specific bar. So we just went through a few examples with you on the 1 minute. You guys remember this chart, right? 70. You had the up and down, and then boom, you broke. It went 86 ticks to your target, and it was after it broke this triple top, and it could have been the same thing if it broke this triple bottom. So we remember this example that we just went through on the wave chart, right? So remember this point here and remember this point here, right? So on a price ladder, something like this, you're going to be watching for, look up here at 45.80 right now. There's 127 limit orders resting short at 45.80 right here on this chart. So that's giving you a real-time interpretation of some of the congestion that may be up ahead of you here, right? But if you don't like to look at those numbers, right, this is what that chart looks like with the volume bars. Here's that peak up. Here's that triple bottom. And look at your break point right there. You see that? Is that not the visual representation that you need to say, well, that's a lot of volume, right? There's a lot of volume right there. If we come back into that zone, that's probably going to be pretty tough to get through because that's a lot of volume, right? And look at the volume on the way up. Look at how the volume responded on the way up. Big volume bar, a little bit of retracement, right? Big volume bars up into your target, right? That is a very good graphical illustration of this. So with your support and resistance zones, and you know it's there, right? This is that same wave on a regular looking chart. This is the same thing on a regular chart. And you know that this is going to be the break point. Well, your clue that that's coming is right here. Look at the size of that bar on that break. That's pretty cool, right? By the way, we are the only guys on Ninja. There's nobody else in Ninja doing this. There's some other platforms that do it. Nobody else in Ninja will offer you this, right? We are the only guys doing this. But again, this volume on the breakthrough this level speaks volumes as to what's happening, and you don't have to be a genius to read this, right? You don't have to parse through all of these numbers to be able to get to this point right here. All right, let's take a look at another example. Okay, remember we went through the August 31st chart. You had this big break on 4,200, then you had this break around, and then you had this move up into the target area, right? All right, so we talked about that chart a minute ago. Here are your volume bars. Now, you had this big volume bar up, and so there's not a, oh my gosh, huge bar that takes you into that. But what you see is you see the volume on the way up beginning to build, right? Big bar, and all the selling is on smaller and smaller amounts, right? So all of this is on smaller and smaller amounts. And then once you hit your break point, look, right here, and this is your key, right? It's this bar that you're anchoring your decision off of, right? This was the bar we were anchoring the decision off of because we said if we push up through this bar, all of this volume that came through, the buyers will have regained control and they take you to your target. But right here, you don't need this, right? You don't need some volume tool that shows you all the different clusters and all of that stuff that's in the middle of all of this. All you need is this visual representation to give you an anchor point to make your decision from. All right, let's take one more example here. Let's take a look at one more example. So here is that 1 minute chart from August 28th. Again, same thing, break point. You're looking for this break here. You had all of this consolidation around your OTG support and resistance level. And here is the volume bar. Doesn't that speak volumes? No pun intended. Doesn't that tell you what you need to know? Looking at this chart right here, where's the volume coming in at? Where is your volume at, and where is the market headed, right? You had all of this rotation, big push up into it. You couldn't get below the bottom of this big anchor bar right here. You had a break point above the top of this. Look at all of that volume, and in 18 minutes, it goes 67 ticks right to your target. That's not even 18 minutes, I don't think. This is a 1 minute chart. 1, 2, 3, 4, 5, 6, 7. 7 minutes, right up to your chart, right up to your deal, right? And that the distance here was 18 ticks. 67 ticks, right? And if you're in the trading room with us day in and day out, and if you see the OTG Trade of the Day videos, and there's over 400 now on our Vimeo channel. This is what you'll see us do this every day, right? You see us day in and day out come in and do these types of things. Yeah, Kim, it does. It just paints it out for you. in a really simplistic fashion. Okay, so I'm gonna. This is kind of like the breaking point in this discussion here right now. So what I've showed you before is something that lots of people will show you: entry systems, right? Entry systems, exit strategies. This crosses, that crosses. This goes, that goes. Everybody's got. It's like it's like that old saying. These types of things are like belly buttons, or you pick another spot. Everybody's got one, and they all stink, right? Yeah, it is being recorded. My point of this is that while this is very powerful stuff, the thing I'm going to show you next is the difference maker and the game changer in what you're doing with your trading. I believe that very strongly. This is good stuff. These are the entry exit systems that I use to go $9,000 in 9 days. The next steps, though, that I'm going to show you are the bread and butter of your trading, whether you're using my system or you're using another system. Wow. Hopefully I can live up to the way I just talked about it. All right. So let's talk about what the next step is. OTG risk management, and in my opinion, the most important step in what you're doing here. Let's talk about it. As you know, this is the most glossed over part of the trading equation, and that is risk management. This includes position sizing and risk control, right? Your risk management in itself is the art and the science of cutting your losers short and letting your winners run. We've all heard that. Cut your losers short, let your winners run. Buy low, sell high, never eat yellow snow. I mean, these are all things that we hear all of the time, right? These are things that we hear. These are truisms but being able to do it is a completely different idea. So being able to decipher the overall profitability using a defined entry and exit strategy over time is a key element to your success. Just like trading, risk management requires certain rules to be applied in order to be successful. What are we doing here for OTG risk management tools? We have the OTG risk analyzer algorithm, which I'm going to spend some time showing you. We have a position sizing paradigm shift that we've made here. That's scaling in and all out. And we have the OTG risk manager indicator that I'm going to show you as well. All right, so let's talk first. What I was going to do initially here is I was going to show you this prepared video and yada, yada, yada. But what I decided to do instead, I've kind of made an audible here on the day, and I'm going to show you a few of these things live as they happen. All right, so this is the OTG risk analyzer algorithm. What this sheet is designed to do is it's designed for you to input your variables into your trading variables into this equation, and it's going to spit out your success or not success based on what you've plugged into it. But before I go through this, I'm going to go back and I'm going to say one of the reasons that guys aren't successful, and girls, Kim, sorry, and you may be successful. I don't mean you're not, but you get my point. That one of the reasons that guys aren't successful and gals, traders aren't successful, is they are missing three very basic components to their trading: backtesting, logging, and understanding the variables that go into their money management. Okay? So whenever I do something new or I bring something into the fold, I do a pretty exhaustive backtesting analysis. Then I send out an email to everybody, say, hey, check out the new backtesting. So when Matt came to me and we brought him on, he said, hey, I got this new stuff. And I said, great, that all sounds good. He said, well, you need to try it. And I said, well, you know how it is. I need to test it and look at it before I try it. So I went through my back testing and I came up with these results. Wow, right. These all look really great. Yay, great results. Okay. But we all know what back testing is. Back testing is inherently limited for a number of reasons, but not the least of which is when you're in the real market and the real bullets are flying and you've taken a couple of losing trades, it is hard to stick with it, right? It's hard to stick with it even though you did all that back testing. And then you start talking about slippage and hey, I had to go to the bathroom when this setup occurred, so I didn't take it, whatever, right? The excuses are endless, and the reasons why back testing is hard are endless, okay? So what I did is I back tested this stuff, and then I began to log their performance in a piece of software called TraderView, right? And so this is the TraderView software, and this is the analytics, and I'm going to go through these numbers here in a few minutes. These are these. By the way, that's a big giant middle finger for you at 1 o'clock for me. I don't do very well right there. This is all of the analytics, right? This is the real-time logging of the trades that I took, okay? So that's the second piece that people don't do. Now, let me be the first one to tell you, logging my trades was an acquired taste for me. If I had a bad day, the last thing I wanted to do was sit down and analyze why it is that I lost. I wanted to move on to the next day. And I said, I would have a general idea in my mind. I did this because I broke that rule, or the market just went against me, or I had the right idea, but it didn't get me in time, and all whatever. You get the idea. The point of all of that is that once I finally forced myself into a position where I was logging and analyzing the results, was the time where I was able to go to another step. So let's talk about what this spreadsheet is designed to do. This is your risk analyzer algorithm. So what this thing is going to do is it's going to show you that with proper position sizing and money management, you're going to be able to withstand the ebbs and flows of the day-to-day trading that goes on. Once you get all of your numbers plugged into this, and I'm going to show you numbers here in just a second. Once you get all of the numbers plugged into this, it then takes those numbers and through its algorithm randomly distributes 100 trades or 200 or whatever you want. I choose 100 because that's about 5 setups a day, 20 trading days. That's 100 is about what it is for me. It'll take all of that and then randomly distribute it out over those 100 trades, just like would happen in a regular trading day. So it's not taking into consideration your entries or your exits. It's just simply saying, if your trades perform at this level, that historical trade distribution spread out over these random conditions, this is what you can expect for results. So every time you run this spreadsheet, the results are going to be different. It does not take setups into effect. It takes none of that into effect. It only takes what's been happening to your trading into account. So let me prove that to you here. All right, so I'm going to do this. I'm going to bring this over to the random trade distributor here. First thing, let me do this first. Let me go through. Let me show you what I set up as defaults. I said I'm going to start with the $15,000 account. I'm going to randomly put in 100 trades, and my risk is going to be 1.33% of $15,000. So that's well below, almost half of what the standard 2% that you read from Van Tharp and all these other guys, right? I am going to go at a 1.33% ratio. I'm going to spend $10 on slippage and commission, and that's what I'm going to run these trials against, okay? Now, the next thing I need to do is I need to fill in the random distribution here. So we're going to go back to your trader view, okay? I'm going to go back to my trader view, and I'm going to take a look here. Let me do this. You can see that my average winning trade here was $765, right? $765 was my average trade. 765 divided by the average losing trade, which was $219, means that I was winning 3.49 times what I was losing, right? So you look back up here and you see my risk reward number is 3.49. And I was winning at a rate of 31.8%, so I brought it down to 31, right? I rounded down on this one. Now, what I was trying to do when I went through this is I was trying to take 10-tick stops. But during the middle of this, by the way, this is the other thing I think that makes this pretty cool, is we were going through some wild swings on a daily basis, right? We were going through a wild swing. So if you look here, my average losing trade was $219. Well, if you take 219 and you divide it by 200, which is what I was going to start out the average risk. That's 1.095 or 1.1. So when I lost 1.1 times the average risk. Okay, or as Jared says, it's a 1.1 multiplier. Now, if you look here, I lost 57.6 of my trades, 58%. Okay, you're like, holy, I hear you now. You're like, holy crap, this guy's a quack. He lost 58% of his trades. Well, hang on, let me finish. And you look here, I had 11%, 10.6% that broke even. Okay. So there's your numbers. Randomly, or for the historical trade distribution, 100 trades are going to be randomly distributed at these rates and percentages. Now, you may say to yourself, well, this is going to be interesting because he only won 31% of his trades and he broke even on 69. He broke even or lost on 69, but worse than that, he lost 58% of those trades. Real numbers, okay? You guys all agree with that? Those are real numbers. Now, I'm going to reset this, make sure all of this goes. I'm going to hit start, and I want you to look at the position size right here, right? $200. So that's 2 lots, 10 tick stops, right? 2 lots, 10 tick stops. I'm going to run all 100 trials. It's going to take about 15 seconds for this to run. And remember, this is being randomly distributed based on these percentages that I just plugged in from my real numbers, okay? Look at this. You over 100 trades, you won $7,971, and your win ratio was 31%, and your percent of probability winning, so it lined up. But here's what's cool about this, okay? And by the way, this lines up with the numbers that we've reported, right? This lines up with the numbers that we've reported. Look at the drawdown, 17.4%. I'm hoping you can see that. 17.4% I drew down on my account. So let's take a look here. You see all the red that's fishing around through here? You see all the red that's in here? Let's go right here. Okay? Let's take a look at that right there. There are let's go back a step. Okay? Let's go back to here. All right? So this is, sorry to do this to you here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, break even or losing trades. And I had 23 were break even or losers, and only 3 were winners. Okay? So I'm going to ask you a hypothetical. I've heard about the oil trading group. I've seen some stuff on some sites. I hear it's okay. I'm going to go in there, and you see me lose 23 of 26 trades. I guarantee you, without a doubt and without question, you tell everybody you know that I'm a flake, I'm a hack, I'm a fake, I'm a joke. What is this guy even doing running a room? He's 23 out of 26 losers. But because of the random distribution and nature of this, the system still profited $7,971. Okay? Yep, that's exactly right, Kim. You're going to run for the hills. You're going to go, this guy is a whack. This guy is a joke. So, all right, you say, well, I'm not convinced that, okay, let's just reset it. We're not going to reset it with current equity. We're just going to reset it. We're going to hit start, and we're going to run all of those random trials again. Takes about 15, 20 seconds. These are your random trials. Randomly distributed out over those deals. Okay, this time I won 25% of my trades, randomly distributed, right? We all hit cold streaks sometimes. I randomly distributed. I only won 25% of my trades this month, but after commission and everything factored in, I was still profitable, $1,243. So I bet this is ugly down here. Okay, let's take a look here. Look at that. Look at this, right? Do you see all that? How many of you would stick with your system if you saw it do that? Right? That looks like the St. Valentine's Day bloodbath, doesn't it? From line 32 to line 79. 32 and 79, that is 47 entries. 1, 2, 3, 4, 5, 6 out of 47 were winners. Right? No, Al, I'm not, but that is a good reference for that, isn't it? Right? So 6 winners, 41 losers or break-even trades. I still made money this month. Okay? still would have made money under this scenario. I only won 25% of my trades, okay? This is an incredibly powerful tool. I'm going to show you. I'm going to do it one more time. We're going to randomly do it one more time. Then I'm going to show you what happens when you begin to compound it, right? All right, so you go start, you go run all trials, and again, remember, it's randomly distributing these out over those predetermined ideas that I pulled straight from this, right? These are all of my levels. This is all of the numbers that I pulled straight off the log. And this takes, okay, now look here. This time I had a hot month, 35% versus 31. Do you see the profit? $15,389, right? That's the profit that was achieved this time around. Randomly distributed in different ways, right? I'm not, this is just a random algorithm. You see me running it, right? And the numbers come up different every time. And you had another huge area of losses. But because you were able to win early in the run, you were able to increase your size, your position sizing, right? Your position sizing, etc., right? You were able to do all of that. So now I'm gonna blow your mind here. This is where you start going, nah. Look here. I'm gonna start this. I'm gonna reset this with current equity. Now your risk is 406. That's 10 ticks on 4 lots. Run all of these trials at the same random distribution ratios over here, and let's see what happens. You see that? You won 43% this month. And because as the market was increasing, you were increasing your position size to match, you had a phenomenal month, right? So the point of all of this is this. And what I'm about to tell you is something that I've done, right? That I've done in this, as I've gone through my trading career. I've done the same thing that you're doing. Maybe you're doing it, I mean. You run into a system, you don't understand the mechanics behind the money management aspect, or maybe you haven't done your back testing, and you're just getting your doors beat in, right? And you're like, man, I got to move on to something else. This sucks. This is not a winning system. I was scammed by the vendor because it's not a winning system. I only had 3 winners out of 26, and this thing sucks, and you move on to the next deal, right? You know how that works, right? We all do that. We've all been there. We've all done that. The point is, this particular tool is the greatest psychology helper, right, that you can have, right? This is the greatest tool for your psychology that you can have, and here's what I mean. If you understand that you could still be profitable and your system only wins 3 times out of 26 or 6 times out of 47, as we saw through the random optimizer, if you understand that can happen, and you understand the principles of the next principle that I'm about to show you, you'll be so far ahead of everybody else that you'll be famous. All right, let's talk about the next piece. OTG risk management. Cut the losers short, let the winners run. Okay? So now we have position sizing in our mind. We've got appropriate risk on the table. We've run our system through the risk analyzer. And now we're going to try to control our risk, keeping it as minimum as possible, keeping it as low as possible, right? So just like we all have heard, buy low and sell high, this is an age-old trading mantra that is easier said than done. Cut the losers short, let the winners run, right? That is something that we hear all of the time, but we rarely see executed. I was in a trading room, and I visit these trading rooms because I like to know what's going on. Just besides what's going on in mine, I visit trading rooms to hear what's being done out there, and blah blah blah. Right? I'm doing my homework as a business owner. I was in a trading room, and the guy jumps in, and he gets in CL, and it goes 3 ticks up and 4 ticks back, and the next time it goes up to 2 ticks, he grabbed it and said, "Whoa, this is fantastic. I will put a $20 bill in my pocket every day of the week," right? And I just was kind of sitting there going, man, is that really trading? I mean, oil goes 2 ticks, 4 ticks in a nanosecond, right? Well, the point is that this person didn't know how to do this very basic thing, which is cut the losers short and let the winners run, right? Didn't know how to do this very basic idea. So I'm going to teach you today how to do it, okay? I'm going to show you how to do it. The way we've accomplished this is by using a pyramiding entry system, okay? And so here is the power of the pyramid. All right, on to the next slide. That's me in my trading hat. So, no, but here is the power of the pyramid. And we're going to do some math here, all right? So let's take a look here. Example 1, all in and scaling out on a 4-lot on the CL, right? So you're all in and you're scaling out on the CL. So if you have a losing trade at 10 ticks, you're going to lose $400. And the reality of it is that regardless of your statistical edge, hey, I have a trading system that works 65% of the time. The truth is that the moment that you enter into that trade, it's a 50-50 proposition. It's either going to work or it's not. We all agree with that? It's either going to work or it's not. It's a 50-50 shot. If you lose 10 ticks on 4 lots, you lost $400 on the CL. Now, let's assume that you catch one of those runners that I showed you, 67, 86, whatever. But in this case, we're going to call it a 50-tick winner, okay? So if you have 4 lots and you're scaling out, you're all in and scaling out, you're 2 off at 10 ticks, that's $200, right? That's $100 a piece on a contract. And this, by the way, is the way most guys do it. 1 off at 20 ticks is $200, and then 1 off at 50 ticks, that's $500. That's a $900 win. We would all be extremely happy with a $900 win, I presume. Okay, well, let's talk about the pros and the cons of this. The pros, your winning percentage will be much higher, and that's good for your psychology, right? We all like to win. We all like to be in first place. We all like to make good grades at school. We all like to win, okay? And with this scenario, your winning percentage will be much higher because when you hold on for longer targets, I only won 31% of the time, right? Only 31% of the time did I win. Get your mind wrapped around that. We made $9,000 in 9 days. I only won 31% of the time. The pros to this is it's good for your psychology, right? Because you get to win, you feel good about it. You don't have to. You're not 20. God, I only won 3 out of 26 trades. Boy, that was tough. Okay. The cons to this is that you're maximizing your risk. All of your risk is up front, right? You're max risk up front on the 4 lots you plan on trading. All your risk is front loaded. So you lose 10 ticks, and it's all front loaded. The cons also is that the drawdown is 100% of your full position. Like I said, it's all front loaded. Let's talk about step 2. Example, same example, right? You trade a 2 lot, you take a 10 tick stop, 50-50, all trades are 50-50, you lose $200, okay? Your winning trade's a 4 lot. Now, we're going to take the same 50 tick winner, but this time your entry is long at 42.50 on 2 lots. You add 1 at 42.65, that brings your average price to 42.55. You add 1 at 42.75, that brings your average price up to 42.60, and your target is 50 ticks away from your entry, or 43 even, right? Same 50 tick spread that we talked about in the last example on a 4 lot. Here's your profit. 2 lots off at 50 ticks, $1,000. One trade, you've already made more than you made on that whole thing that you were risking $400 on, right? If it goes that same 50 ticks and you risked your 2 lots, boom, you've already made more. You made 35 ticks on the next one, 25 ticks on that one, and your total for that trade is $1,600, and you only risked $200, right? So what is the pros to this and the cons? The pros is your initial risk on a 4 lot that you planned on trading is reduced by 50%, right? And your losers, you cut short and you let your winners run, right? Those are the pros. Here are the cons, and this is a big one. It's not to be minimized. This one is not to be minimized because it is a major con. It is hard on your psychology, and it goes against the grain from anything else that you will see going on out there. You see what I'm saying? This is hard on your psychology. If you just came into my room and you saw me loot, man, he sounds good. I like the guy. He's nice. We laugh a little bit. But that dude got crushed. 23 trades, 26 trades, and he won 3. See ya, right? You just wouldn't stick around for that, right? And I know guys that do that. I know guys that happens to. They just can't take it, right? Because they don't understand the mechanics behind doing this. And that's the key, right? This is the most powerful thing that you need to get your head wrapped around is this idea right here, okay? This is the most powerful thing to get your head wrapped around. Understanding money management and position sizing, and then understanding how that plays out into the real world. All right, that is the single biggest thing I could do. So let's take a side-by-side comparison. Here it is. 4 lots, all in, scale out. Your losing trade was 400. Your winning trade was 900. Your risk reward is 2.25 to 1. Not bad, right? We'd all say, hey, if you give me 2.25 to 1, I'll take it. Here's the 4 lots, scale in and all out. Losing trade $200, half the risk. Winning trade $1,600. Your risk reward was 8 to 1. Right? Your risk reward in this case is 8 to 1. So if I said to you, hey, risk less and make 4 times as much, we'd all go, cool. Yes, sign me up. Or 2 times as much, whatever. You know what I mean. We'd all say, yeah, that's really cool. Thanks. I'll take it. Sold. Right? But it's hard to do because you have to have confidence. There's not another, I shouldn't say this because I've not seen every single trading room out there, but for the most part, I feel very comfortable. That there's nobody else doing this. So, Daniel, I'm going to answer this question. I've ignored most of the other questions till the end, but this one's important. What happens when you are scaled in at 4 lots and stopped out on all 4? Well, the key to this, Daniel, is every time it moves you up to your average in position, that's where your stop comes in. That's why you're stopped out on 11% of your trades at break even. That's why 11% of your trades end up at break even. Because as the market goes up and it comes back, it takes you back to break even. We'll send you an email, Rick. As it goes up, it comes back and takes you out at break even. Well, it is what it is. But the times that it runs without taking you out at break even, right? No, it's not break even at plus 10, Alvaro. It's break even. Right? Now, sometimes based on market conditions, I may adjust that to take some profit, but in its purest sense, when you're averaging in, you never let that stop go beyond what the break-even point is, right? And so you would think that there was a plant in here because of the next tool that I'm about to show you. We have built a tool called the OTG Risk Management Indicator that is going to simplify this for you in a way that I think you'll find cool. I am going to play this video for you here. All right, so I'm going to take the microphone away from my face for a second. This is about 3 minutes. I'm going to play you this quick video that our buddy Ray put together on the risk management indicator so that you can see exactly what I'm talking about, and I'll be right back with you here.
When we're using the position size. Hey everybody, Ray here, and I just wanted to show you guys a quick demonstration video that I made for how easy and how cool it is to use the OTG Risk Manager. So before we get started, one of the most unique features of the OTG Risk Manager is if we look up here in the upper left-hand corner of the chart, you're going to notice there's a risk percentage. And you're going to see my account size that I've got right here to work off of $50,280. Now, when we're using the position sizing, what we're actually doing is we're using this percentage. We're actually risking a percentage of our account rather than just assigning a certain number of contracts. Now, we can make this risk higher if we want, or we can make this risk lower if we want. But for this demonstration, I'm just going to go ahead and keep it simple and leave it at 1%. So let's go ahead and let's move on over here to the right-hand side of our chart. And you're going to notice a button that says Trade Plan. You can either turn the position sizing on or off. And you're going to notice down here, you're going to see 2 different entry levels. Now you can put as many or as few contracts on here as you like. And in this case, I'm using the OTG room settings where we're going to add our first contract to the winner at a positive 15 tick trade And then we're going to add our second contract to that winner at positive 25 ticks. You're going to notice this little bar that we see down here, current at 56%. Let me explain this real quick. Let's say we've got a certain goal for the day that we want to meet. Let me show you how to set that real quick. So moving into our indicator panel real quick, I don't want to bore you guys with this stuff. You can see where I've got a spot where I can actually set my goal. And in this case, I've set my goal to $500. I'm currently up 28 ticks on the day for oil. Therefore, I'm 56% in the green towards my goal. Let's go ahead and then let's set up a trade. All right, all I've simply got to do is click trade plan, set this guy here. I'm going to do a 10 tick stop at 48.04, set that guy there, and then I'm going to set my target all the way down here. Next, all I've got to do is place my sell order.
Order pending.
All right, so there's my sell order.
Order pending.
And the risk manager in this case is allowing me to trade 5 contracts with a $500 risk. So I'm right at about 1%. Next thing I need to do is wait and see how far my trade goes positive and wait for my next 2 pyramid orders to fill. You will notice with Risk Manager that there is only one profit target. Remember, guys, Risk Manager is designed to help you take advantage of those big moves that the market has to offer. All right, so you're going to notice we've got these dashed lines below our entry right here. What this is when our first order fills, this is going to show us where our average entry price is. And then when the second order fills, it's going to show right here. I'm going to go ahead and I'm going to pause the video and we'll come back when this trade starts to finish out.
Order filled.
All right, so my first pyramid order has already been filled, and you can see where my average price has moved down. I'm going to go ahead and pause the video, and we'll come back when this order fills. So we're getting pretty close to filling on this order.
Filled.
Well, I hope you guys found this video to be informative. We can definitely go way more in depth when it comes to risk and money management. But, you know, more importantly, what I really wanted to demonstrate here is not only is it easy to use this tool, and not only does it help us choose how many contracts we should trade for our account size, which is just, you know, bottom line, good risk management, but I wanted to show you the power of pyramiding as well. I mean, after all, that is how Jason did $9 grand in 9 days with the Top Step Trader Combine. Well, all right, guys, if you have any questions, please feel free to ask Jason about it while you're here in the webinar. Have a great day.
Yeah, you're right, TC. He would have been stopped out of break even. And so what he was really doing there is just showing you the methodology behind the indicator. But yes, in technical terms, you're right. That would have come back and grabbed him at that break even point. What I really wanted him to do when he made this video is just show you a couple of things. How you could see that the market moved, or not the market, but how when you mapped out this trade, it showed you where your break-even points would be based on those new entries, right? And so also what I wanted you to see is how the flags went from 5 lots to 6 lots to 7 lots. But you're absolutely right, TC. That's a great point. Very observant. And that is something that he would have been stopped out. But like I said, I just wanted to show you the functionality of the indicator. So just to kind of put a bow on all of this, risk analyzer algorithm, position sizing with pyramiding, and then an indicator that's going to show you how to do it so you don't have to be doing the math in the middle of all that. If you want a bigger, better example of that, Dave has posted a link into the forum here, into the chat room, and we wrote a blog on the power of pyramiding. And there's about an 8-minute video in there that is very good on what that pyramiding allows you to do and the way that the tool works in more detail. So anyway, Let's move on to the next slide. It's running a little bit longer here. So basically, we're at the top, right? We're at our goal. So I wanted to take one more look at the numbers here. I want to take one more look inside the numbers here for you. 9 days according to TraderView, right? We've gone through this. Here's the key points or the key elements to these numbers in that 9 days. It is the largest gain here was $3,030, was 5.95 times larger than the largest loser. And I want to tell you something about this particular trade. I was down a good chunk of ticks on this day, right? And this one trade pushed me over the top. And Dave, if you'll put this in there, I think look for the day that says OTG trade of the day, 300 plus ticks. Watch the widget in the top right-hand corner of the screen. You're going to see I was down quite a few ticks on that particular day, right? I was down quite a few ticks on this particular day, and you'll see how this trade completely flipped my day on this particular trades. But we've got it video recorded for you in its entirety, and Dave's going to put the link in the room. Average winning trade was 3.5 times larger than the average losing trade. 31.2% winning trades. Put this in another way. 68, and that math is wrong. 68.8% of the trades were losers or scratch, right? Over 68% were losers or scratch. Average hold time for 3 winners was 3 times greater than the average hold time for your losers right here. Your average hold time for your winners, let the winners run, 9 minutes. Average hold time for your losers, 3 minutes. Cut the losers short, right? And a very interesting stat that TraderView provides you, it's called the probability of random chance, right? What's the probability that this was just a stroke of luck here, right? And that is the chance of random possibility was 6.3%, or put into another way, 94% of the chance that this wasn't luck, right? That this was not luck, that this was actual real results. All right, so I'm going to do one more thing, right? I'm going to tell you what we're offering here today, and then I'm going to open this up to all the questions. So I'm going to tell you what we're offering here for you today, and then if you want to stay, great. If you want to go, great. And then I'm going to open this up for as many questions as you want to ask me here. So here's what we're offering. 4 hours of live training hosted by me and Matt Bowen, where we are going to go through each one of these topics. I gave you the high level, like I told you, the high level 30,000 foot treetop view. We're going to go through 4 hours of live training with you and discuss these concepts in much, much more detail with you. The other thing here is we're going to be doing this on Wednesday. It's going to be a week from yesterday, from noon to 4 Eastern time. It will be recorded. We're also going to be providing training material in the form of PDFs and video examples. And again, if you're unable to attend the live session, it will be recorded, and you'll be able to take advantage of that. Here's what else you get. You're going to get lifetime licenses for the following trading tools: OTG Wave Indicator, OTG Volume Bars. Remember, nobody else is giving you OTG Volume Bars on NinjaTrader. OTG Wave Average Volume, which I didn't even talk to you about today, but we'll explain that in more detail. The OTG Risk Manager, and then that spreadsheet that I think is worth the price of admission, right? If you did nothing else, if you sat down on a couch with the trading psychologist and he said to you, look, at the end of 4 months, $100 a week on my couch, $1,600, I will give you a tool and confidence that your trading system works, you would do it, right? You would gladly spend that money. I'm going to give you that spreadsheet here. 3-month subscriptions. You're going to get 2 trading rooms with this. You're going to get Matt's room, and you're going to get my room, where this methodology and trading style is traded every single day, okay? You're going to get 3-month subscription to that. So you may like my style. You may like Matt's style. You may like both styles. Matt tends to trade the entire day. I tend to stop at around 10 a.m. Central Time. So once I'm done, you can move over to Matt's room. You may like Matt's style better. You haven't heard him speak today, but this is also included in this. You're also going to get a 3-month subscription to those SNR levels and to the OTG trade plan, which we talked about. Now, all of this is for the price of $25.99 for the entire package. $9,000 in 9 days, $25.99. But we are going to make it a little sweeter. we're going to say the early bird special, if booked prior to the live event, at $16.99. That's a 35% discount, which at the end of the event, we're moving this up to $25.99. A year ago, we ran this thing called the DYTE, and I think we charged $16.99 for it. If you go to our pricing site, it's now $29.99. Now, having said that, we're going to limit the class here to 50 seats, okay? We're going to limit the class here to 50 seats at this point, all right? And so if you get in, we want to be able to talk to people and be able to interact in a really positive way. But we're going to limit the class to 50 seats. Once it's 50 seats have been sold, it's going to go back up to that regular price, and then that's where we're going to leave it. All right, so that's the presentation. Now, we have one more thing before you all start bailing out of here today. We said that we were going to give away a free program today, okay? We said that we were going to give away a free program. So Dave has been going through the information, and he has pulled out the name of Sandra Pushing. Are you still here, Sandra? You sure are. Sandra, congratulations. You are going to get this free package here. All right? So what I want you to do is talk to Dave. Yeah, Sandra, that's cool. Yeah, good stuff. All right, so Dave is going to put in the announcement section and also in the chat room, he's going to give you a buy now button if you're interested, right? He's going to put the link if you're interested in purchasing this. Remember, 50 seats. We're going to limit this to 50 seats. And if you go ahead, he'll put that in the announcement folder and also in the chat room here. All right, so I've gone through a lot of information today, right? So I'm not going to hard sell you. That's all the selling you're going to get from me, right? Now, what I want to talk to you about is the questions, right? Yeah, look under your chair. Everybody look under your chair. There's an envelope there with the keys to your new minivan parked out back. So I want to talk to you, or I want you to talk to me about what you've seen and what your thoughts are and all of those kinds of things. And I am open for all the questions you got. Yes, please, Dave. And so there's that. Okay, so, all right, Todd, what about trading with TradeStation? Okay, well, Todd, that is absolutely a fair question. Obviously, there's a few things that work with that you don't need NinjaTrader for. And that's obviously that algorithm spreadsheet. You can do the math on just a very quick spreadsheet. In fact, before I developed the tool that you see there today, I would do this. This is the tool. I simply did this. I created this little thing. And as I was preparing to get into an entry, I would just go 45, 34. I was long. I was going to add at 15 and 25. So if I added here at 49 and brought my average to 39, I could send you that, right? If you're on TradeStation. The other thing you could do is NinjaTrader offers, free stuff, right? They offer a free platform for you to be able to use, and you can download. These work on the free version of NinjaTrader as well. All right, so I was thinking, okay, let's see. Todd, what about TradeStation? Are you going to finance this? Rick, we're not, and here's why. Once you do finance, once I train everybody, they got the information, and if you decided not to pay, not you specifically, but if someone decided not to pay on the financing, then we're kind of out, right? And I think we're really being fair with the price here. I mean, listen, I was telling Matt and Dave, I said, I've purchased things in my life. I'm just like you guys. I've purchased stuff, right? I have purchased stuff out there that is way less effective and way less real than and I've paid twice the price for it. The reason that we're offering it at this price and this kind of discounted price is we really, truly, and this is going to sound cheesy and take it for what it's worth, we care about you being successful. We are interested in you being successful. And I think if you spend a few minutes here with this, you'll understand that this is something nobody else is doing. Nobody else out there. You will not see a trade room that puts their numbers on display in this kind of way, right? But beyond that, that is showing you how to average into a position instead of scaling out, right? TC, let's see. Let's come back here. Let me make sure I'm getting all the right. What about TradeStation explaining everything? Can we do this manually? Yes. Does NinjaTrader run on Macs yet? I think, Jared, that's a NinjaTrader technical question. I think Kareem could probably help us with that if he's in here, but I think there is a patch for that. That's funny, Bill. All right. Can you use your tools trading the ZB? You know what? Matt trades the ZB every day, TC. I say every day. He looks at bonds every day. And yes. Gotcha, Chris. Mike, maybe I missed, but can you explain how you scale in and yet limit your stop loss? Yeah. So basically, this is going to be a simpler thing to show you here on this spreadsheet, Mike. So if I'm in at 45.31 long, I'm going to add at 15 ticks. Well, when I add at 15 ticks, that's going to bring my average position to 45.39. I immediately move my stop to that number, right? And then if I add again in 10 more ticks, that brings my stop to 45.44. I immediately bring my stop to that number. So if I'm adding into the position, I'm never letting it go against me at that point, right? I am never, ever letting it go against me at that point. Hopefully that makes sense, Mike. Does that make sense? Hopefully. All right. I'm just trying to get to these as fast as I can. That link says not found, TJ. All right. I'm not sure. Dave, can you help TJ out? Alvaro. Okay. Daniel X. The best way to run ninjas on a Mac. Okay. Andrew Oliver. Hi. I used to use OFA a lot and have partnering with DB. Can you explain why I've stopped using it? Yeah, you know what? We had a business relationship with OFA, right? And they're good guys and they offer good tools. But the thing that I found that speaks to me better is this price ladder with Jigsaw. Be candid with you, this thing speaks to me in a better way. And then now Matt showed me something that I don't even have to wrap my head around in terms of numbers with those volume bars, right? He has showed me how to do that with the volume bars in a way that makes a ton of sense for me. So they offer a great product. We had a business relationship. We had a joint venture for a one-time deal, and they're a great company. And hopefully I think they do think we're a great company. And we just kind of went in a different direction. But in the end, it's really all the same. It's just how you decide to look at it. The one real difference here, I think, now than what we're doing in other places or that you'll see in other ways is just the visual representation that those OTG volume bars provide for you. Can use okay to purchase, okay. PCs are cheap in order to run Ninja. Okay, parallels. You can set up a Windows virtual machine. Okay. Okay, Sandra. Yep. Okay, early presentation. Would you have entered after the pullback or hold through it? Paulette, you're in there a lot. You see that I hold through it, right? I hold through it. Depending on, and I don't know if you're talking about the wave bar entries or some other entry, but if you're talking about what happens once I get into a trade, I'll hold on like a dog with a bone, right, to get to that target. If you're talking about around the OTG support and resistance levels, then I would use that wave tool to help with the order entry around that. Let's see. Can we talk after the webinar? Bill Perry. Thanks, Bill. Daniel, OFA shows executed order Jigsaw's pre and post trade, not the same at all. Well, okay. It will show you executed orders as well as what's going on around it. So you're right. In fact, I think Jigsaw is more in depth, to be honest with you. That's my thought. Well, Ed, that's really up to you, right? Now you're starting to get me into CTA territories. But one of the things that I ran is with an account size of 15,000 on this spreadsheet, right? So you can go and tinker with this number, right? You can go and tinker with this number if you wanted to do $10,000, right? You wanted to do $10,000, you can reset and start and run 100 trials. Now at this point, you're only risking $133. That's 13 ticks, right? And we'll run it through at $10,000. Well, you made $6,800 risking $133 on a $10,000 account, risking 1.33%. through your random numbers here. So really, it's really up to you, my friend. It really is up to you. Let's see. What establishes the S&R levels? You know what? It's one of those things that I go through. It's a process I go through every evening to come up with it, and it's a mix of price action and a dash of salt and a pinch of this. And it's like when you watch your mom cook. I'm being purposefully vague, but it's like when you used to watch your mom cook and you go, man, that was really awesome spaghetti. Can you tell me how to do it? Can you give me the recipe? And she tells you, well, it's a pinch of this and a dash of that. And then I taste it, right? Well, the S&Rs are a little bit more sophisticated than that, but it's just a process that I go through on a day in, day out basis. Let's see. Mike, yes. So how do we get the S&R levels? They become part of your program. If you purchase it, you get an indicator that goes right on top of those levels, and they'll go there with you. Well, Al, yes, spoofing is a very real thing that goes on in the market. And so what you are doing, and that's where the volume bars will help you understand and dig through that. Those volume bars will help you dig through that because they're showing you executed orders that actually were filled, right? So it will identify the spoofing for you, and the candles won't be big if those orders aren't filled. Let's see. Mike, you have more chance of getting... Yeah, that's probably true. That's Mark F., a longtime member, yes. Okay, so let's just take a look. That's the second time here. You know what? Then email, TJ, talk to... talk to Dave directly. He could get you, because this is what you should be seeing, okay? This is what you should be seeing on that link. It's working, but that's what you should be seeing right there. Right? This is what you should be seeing. So that's seems to be working on that end. Okay. What is the worst case intraday drawdown? Well, again, you saw those scenarios that I ran, Charlie, where you had a drawdown of 26% on one of the days, on one of the cycles that you ran. And so it's a randomly distributed type of deal, but you can have drawdown does and occur. And that's why getting a hold of this spreadsheet and getting hold of this risk algorithm is something that will really help you determine that by running different scenarios through it. Right? That's really the key. That's really the key there is being able to do that. By the way, if you end up purchasing this today, tomorrow, to get ahead of the curve here on the live event, your materials won't be delivered until this weekend, okay? So if we do get you into this and you do decide to do it, your materials are going to be delivered this weekend, okay? We've just got a couple of finishing touches we need to do on a couple of things, so your materials will be delivered this weekend. And so what's going to end up happening is you're going to be getting a login. You're going to be getting a login that looks like this, okay? Here's your member login, and all your content will be on the back end, and you're going to be able to log into the back end of the website, and then all of your content will be listed over here, okay? So this gives you all the different things that we offer and et cetera, right? But this is what the back end looks like. So I just want to make sure we're clear here. If you do end up getting this and getting ahead of the curve, your content will be delivered over the weekend. It's not going to be immediately today. It'll be delivered to you over the weekend. So TJ, talk to Dave, reach out to TJ. You may already be doing it. The volume bars and the wave charts eliminate any spoofing. That's right. Do you set yourself a max number of trades per day? Let me tell you what I'm flirting with doing here right now. And I say I'm flirting. I'm about 99.9% I'm going to do this. I'm going to open up an account, and the reason I used $15,000, I'm going to open up an account with a broker that supports T4, the T4 platform. And I am going to trade this $15,000 account live in the room in the same way that I went through the combine. And what I'm going to do, Alvaro, and again, I'm about 99% certain I'm going to do this. What I'm going to do with it is I'm going to set myself a lockout limit, a risk management limit of about $800 a day, 800 to 850 a day, where it just shuts me out, right? And it's just going to be another tool that I'm going to show you how to go about putting yourself into a risk control position where you can minimize your risk on a day-to-day type thing. Like I said, about 99% sure I'm going to do that. I don't know exactly when that's going to happen, but that is in the works of something that I'm going to look to do. Let's see. You've been using a lower time frame. So you've been using a lower time frame, average true range, correct? Yeah, you should, Paulette, already have the OTG trend finder. You should already have that access to that. If you don't, send me an email. Let's see. Our pop-ups, Bill. Check your firewall. Okay, gotcha, Dave. Okay. Yep, Najmul, we just finished. Let's see. I'll sneak in. Reg, of course, I was out of miss. Most of these new tools, are you going to give them a little me too? Yes. Let's see. During your combine, your largest losing day was $1,000. Would you allow yourself to go even more minus? Yeah, Charlie, I would. Because in the end, I know that. So here's what's happening. Your largest losing day. So here's one of the things that is always a pitfall in this kind of stuff. One losing day wipes out 3 winning days, right? That sucks. We've all done it. We've been there. It happens. Yes, I would. But my average winning day was about $1,200-$1,300. So I would let myself go a little deeper because I knew that. But by the time I've done that, I'm pretty much in a funk, and I'll end up stopping somewhere in that zip code of loss. But yes, I would do that. I would still do that. But here's the beauty of it. They give you $4,500 max drawdown and $3,000 in a day. What you're actually risking on a $150,000 account, look at this, okay? This is what you're actually risking on that $150,000 account. And this is why, this is the formula to pass this, by the way, is I think you need to go back to 0.013, I think, is the risk. Let me just look here. No, that's not right. Sorry, give me a second here. My brain's 0.013 on the risk. And I think it's even less than that. And you go to reset and start. Yeah, that's about right. 0.13% is the risk. You could trade forever, right? $200 is 0.133% risk. You could trade forever, right? You could trade forever. So you don't even really, I mean, yes, you could take a bunch of stops and get killed and all that stuff. But the point of that is that eventually you're going to hit that winner and it's going to make everything correct again because you're risking such a small amount of your overall account size. So hopefully that makes sense. I'm not sure if I answered that. So it does not seem realistic to me trying to trade in the 150K combine, risking 1% per trade. I wouldn't risk 1%, Jeffro. What I was just showing you, you're trading 2 lots. I did that on 2 lots. And if you don't think that you could do that on 2 lots, you have to lose $3,000 in one day. You have to lose 150 ticks per contract at 10 ticks average a stop. You're losing 15 straight trades in a row. You probably needed to stop, right? So I did this combine way back in the beginning. I said I did this combine on a 2 lot, right? I didn't do it on a 6 lot or an 8 lot or 1% risk. I did it on a 2 lot, right? And so it is the most realistic way. It should be your best odds to completing a continuous 150K combine to be able to stand the ebbs and flows on a 2 lot on 150K. That would be your best. It doesn't. I don't think it gets any better than that, to be candid with you. I don't think it gets any better than that. Let's see. You have Trend Finder asking about ATR, average true range. I don't have an indicator for that, Paulette. So I'm not quite sure what you're asking me. Jason, on the spreadsheet sample, have you used the results from the 9,009 days as a sample to see what the ad on trades look like? Let's see. I'm not sure exactly what you're asking me, Randy. I'm sorry. Yeah, I've been talking for an hour and a half, and I may be a little slow on the uptick here. So while we're doing that, are there any other questions? Again, this is going to be recorded for you, and we're going to send this out here later today. This will be recorded. Well, there's many different options, TJ, and Dave can go through those with you. But whatever it is you spend with us always gets applied to loyalty as what we call loyalty credits, and they go into whatever next program we offer, right, or whatever you want to do to continue on. You get loyalty credits with it. Well, thank you, Paulette. Very kind of you to say. And we're just hanging on here to see if there's any additional. Well, thanks, Paulette. We try to be as transparent as possible. But so who was asking me on the 150K combine? Let's do it this way. Okay? Let's say you're going to risk that 0.133. Let's run a few samples just through this spreadsheet here. All right, so we'll go 0.133 on the. We'll go to reset. Okay, we'll go to stop. We'll go to reset. We'll start it, and then you're risking $200. That's 2 lots on your 150K account. You run all your trials through it, and we'll see what happens here. All right, so running it through the random spreadsheet, and again, you have all of this buying power now, right? There was a profit of 11 grand. Right, and then again, there's all of your, and that's in 1 month. That's 100 trades, and it's up 11 grand. And your drawdown, your max drawdown at this point was only 2%. So I don't like that. I don't think that may be realistic. So let's run it again. Let's run it one more time. All right, so. Again, the drawdown is low on this. Oh, of course it's low, right? Of course it's low because you're talking about a 150K account, right? Of course the drawdown's low. Sorry, I told you my brain's not functioning properly. The point of all of this is that this spreadsheet will help you determine what the best risk profile for you specifically is, right? And that's really that's really it. That gives you the best risk profile. Yeah, Mike. In fact, I appreciate you saying that. I know you spend all your time over there with Matt, and you guys are good are friends. But Matt has shared with me the complimentary stuff that you've said, and I do appreciate it, Mike, for sure. Thanks, John. No problem, Jeffro. It's good to have you guys in here. So I'm gonna go last call here on questions. Hey, well, thanks, Lindsay. We appreciate you being in here, and I know you're in Spain, so it's probably 10:30 at night, or at least maybe even 11:30. But it's different than definitely different than being in Australia time, right? Thanks, Rob. We appreciate it today. Paulette, thank you. Tony, thank you. Rick, thank you. All right, everybody. You guys have a good rest of your day and evening, and we'll see you on the other side here. We certainly appreciate the time you spent with us here today. And we'll be throwing this out in the form of a video, and you should receive it here, hopefully this afternoon, this evening, but definitely by tomorrow. All right? So, again, you guys take care. You guys have a good rest of your day, and I'll see you hopefully very soon.